Hi everybody, this is Lara with your weekly video for US oil for the trading week ending Friday 12th of November 2021. An upwards week fits expectations for both Elliott Wave counts, but now they diverge. The alternate expects some downward sideways movement and the main wave count expects support here at a trend line and for price to continue higher. The next target is at 95.38 and the price point that differentiates the two wave counts is 78.26. If price remains above that point, they will both remain valid. And they're only different at the daily chart level. The monthly chart remains the same. It sees a big corrective movement over down here and a third wave at supercycle degree beginning here, which may only subdivide as an impulse. At cycle degree, that will be labelled 1, 2, 3, 4, 5, and it has to meet all those core Elliott Wave rules for an impulse. Cycle 1, remember Elliott Wave is fractal. It subdivides its lower degree or lower fractal as primary degree, and it's subdividing as an impulse. Primary 1, 2, 3, 4 are complete. Primary 5 is underway. When cycle 1 is complete, then a bear market will be expected for oil for cycle 2 to last 1 to several years, and it may not move beyond the start of 1 below 10.24. That's probably still a few months away. Let's take a look at the weekly chart where this slow down here is this point down here. Here's cycle 1, primary 1, 2, 3, 4, primary 5. Primary 1 was not extended. Primary 3 is a little bit longer than 1. It's extended and we see its subdivisions at a higher time frame. Primary 4 is a double zigzag. Primary 2 is a single zigzag, so there's some alternation in structure there. Primary 5 may extend, but the most common Fibonacci ratio for a fifth wave is equality in length with the first wave. That would be achieved at 95.38. Primary wave 5 is subdividing as an impulse, with my intermediate 1 and 2 most likely complete. My main wave count expects intermediate 2 is complete and intermediate 3 within primary 5 may be in its early days. The alternate considers the possibility intermediate 2 may not be complete and could continue sideways as a combination for another week or two. And if it does continue, it may not move beyond the start of 1 below 61.74. Let's take a look at the first wave count where the low for intermediate 1 and the high for intermediate 1. Here's the low, here's the high. Intermediate 1 ends here, which is not the price extreme. This is part of intermediate 2. If intermediate 2 is over, it fits beautifully as an expanded flat, A, B, C, subdividing 3, 3, 5. Intermediate 1 fits really well as a 5-wave impulse, minor 1, 2, an extended third wave, 4, short little fifth wave. That's really normal look for a first wave at intermediate degree for oil. If intermediate 2 is over here, it's relatively shallow, ending just a little below the 0.236 Fibonacci ratio. But that's okay, because if we go back to the weekly chart, we can see that these corrections are shallow. And so that would be continuing the pattern for over a year now. It has somewhat reasonable proportion to intermediate 1, but because it is relatively brief and shallow, we should consider an alternate. It could be continuing. We'll look at that next. Intermediate 3 may only subdivide as an impulse, which at minor degree will be labelled 1, 2, 3, 4, 5. I will expect minor wave 3 to be extremely likely to be a long extension. When intermediate 3 and 4 are complete within primary 5, then I can add to the target calculation at intermediate degree. And so at that stage it may widen to a small zone or it may change. Minor 2 may not move beyond the start of 1 below 78.26. Draw a base channel around primary 5 from the start of intermediate 1 to the end of intermediate 2. Place a parallel copy on the end of intermediate 1. When we do that, this upper trend line is perfectly tested with resistance, and this end of this week may be tested with support for minor wave 2. If minor wave 2 ends there, then the channel would look like it's drawn correctly. So I will expect pretty good support here. If this trend line is breached next week, the probability of the main wave count will decline in favour of the alternate. Let's take a look at that. It's identical to this point up here, the end of intermediate wave 1, and then if we move the degree of labelling within this expanded flat down 1 degree, it could just be minor wave W of a double combination to be labelled W, X, Y. I haven't drawn the ABC in here for X. It's relatively brief, which is absolutely normal for an X wave. We could draw it in here, but really you need to go to lower time frames to see that. So I just don't want that to confuse anyone with the labelling. There would be a pink ABC in here if we wanted to put it in. Minor wave W subdivides as an expanded flat, A, B, C, subdividing 3, 3, 5, B is a quick zigzag, and again I haven't put the labels in because you really need to see that at lower time frames. X, a quick zigzag, and now minor wave Y, the second structure in a double combination, may be underway and would most likely by a very, very wide margin subdivide as a zigzag. They're relatively brief structures, so it may be over within a few days or maybe a week at the most. It's possible it could continue longer if the B wave within it is time consuming, but zigzags tend to be reasonably quick structures. I say it's most likely to be a zigzag because double combinations are fairly common structures, and within a double combination the most common two is one flat and one zigzag. Double flats are quite rare structures. I've only seen a few in my now over 13 years of daily analysis, and a double combination where Y is a triangle, I've only think I've seen a couple, maybe 3 in my years of analysis. And so the probability that minor wave Y will be a zigzag is very high indeed for this wave count, if this wave count is correct. Intermediate 2 may not move beyond the start of 1 below 61.74. Classic analysis now. At the weekly chart level, at this high we had bearish divergence between price and RSI, not particularly strong, it's somewhat weak. This red candlestick may be enough to resolve that. We may need some more sideways movement, and that's another reason why I'm outlining that alternate wave count for you. This week the candlestick has a bearish upper wick. Last week it had a bullish long lower wick. This week isn't complete at the time of publication. This candlestick may change slightly. It might end as a little red doji at 4:15 in the afternoon on Friday. That's looking like what it may be. And we can't draw a conclusion from volume for this week, but the previous week we did see volume pushing price lower. So this is bearish, and again that would tend to favour the alternate Elliott wave count. So take it as a serious consideration. No signal from on-balance volume, RSI back in neutral territory, but only just. ADX indicating an upward trend, which is just now extreme. It's only just above both DX lines, but there's a long way to go before it gets as extreme as it can for this market. Lots of room overhead. Stochastics overbought, but when ADX indicates a trend, we use RSI, not stochastics. And ATR declining as price moves higher seems to be normal behaviour for this market, like the S&P. At the daily chart level, Thursday's candlestick's a really strong bearish candlestick with push from volume. Now that also tends to suggest the alternate wave count may be more likely than the main. If we see more downward movement, look out for support at 78. If price moves below that, 76.9. On balance volume has a weak range, giving us no new signal this week. Resistance may halt rising price, but the trend lines are quickly converging, so it should break out of this weak range soon, giving us a weak signal. ADX is declining, the DX lines are whipsawing. At the daily chart level there's no clear trend, but remember the weekly chart level there is an upward trend. RSI neutral territory, as is stochastics, and ATR increasing as price falls, normal behaviour for this market. I will favour the main wave count slightly, as long as price continues to find support at the lower edge of that base channel in my main daily chart. If that trend line is breached, the alternate is a very serious consideration. It still has some support from classic technical analysis. That's all from me this week with your oil analysis. I hope all our members are looking forward to an awesome weekend.